Good day, traders. Stacey Burke from Stacey Burke Trading. Just continuing our discussion from yesterday on market maker templates, smart money, institutional money, whatever you want to call it. And today looking at some daily charts, daily time frames, and just debunking some of the media hype around the coronavirus and the being at fault for a lot of the recent crashing in the global markets. If we take a look at some of the global markets, for example, the Nikkei, we can see that the market had been building into highs over several months before peaking out. And this is, if we back this chart up even further, we can see that the market had already reached significant levels again prior to this coronavirus that's taken the world by storm. But you can see that there was 3 peaks formed heading into February, and then we had another 3 push pattern that eventually capitulated into the falls that we're seeing happening now. Often you'll find that news, whether it's part of the economic monthly calendar, payrolls, Bank of England interest rate reports, different countries' interest rate announcements each month, the market will often build into peaks before it capitulates on the news. So that again, we see this pattern where the market drags traders up into highs when they want to start selling off. Looking at gold, gold possibly maybe has put a high in place for the year. We see that the market again back in April again started to move up aggressively and then went sideways and down for a few months before capitulating off into a peak at the end of February. And again, we've got this range depending on how the market handles these levels, possibly that gold could have a peak in place for this year. Crude oil, again, the market auctioned back up to recent highs from August before correcting down and coming down even harder in February, possibly approaching some of our all-time lows. The S&P, of course, had been building since November in 2018 and progressively going higher and accelerating into a 3-leg pattern that has eventually peaked out in February. So again, we may be seeing some highs for the year in place. Time will tell, obviously, but going back to the 2008 global financial crisis, a lot of the measures that caused that initial crisis to happen in Europe and globally have not been rectified. So the question lying out there is that, have they used all their tactics and tools to prop this market up for this extended period of time, and where will we head to now? Looking at the DAX, very similar as well. It accelerated into a 3-push pattern into a peak at towards the middle of February, and we are now in a massive blow-off, which I think we could see how these levels are maintained, but we could see this market head into a sideways or even downwards market for the next 12 to 18 months. But looking at our pairs, the British pound crosses, if we take a look at the pound New Zealand, we can see that the pound New Zealand has also moved up 3 layers, 3 levels back to highs for the year. And this week could give us some insight into where we may head to from here. This level around 2,500 could become significant, and we'll see how the market handles that in the next few days to either continue its run up or possibly be putting in a high for the current time frame. We look at the pound Swiss, and similar to the templates we discussed last week with the 3 levels of rise and then a peak formation, this market then went sideways and consolidated into January and February. We saw pushes back in towards the peak, 1 push, 2 push, 3 pushes sideways, and then an engulfment pattern. And again, looking at these daily charts, These 250 pip increment levels are significant, and again we'll notice how the pound Swiss handles these levels heading into this week to see if we see just a pullback for a continuation down, or if we see that market auction into a low before consolidating for possibly a retest of this area up around 2,700. Pound Canadian, again very similar, 3 levels of rise and then accelerating into 3 pushes into a peak, dropping down, consolidating, and then a retest of that gap where traders had shorted the market, but we see 3 pushes back up and possibly an engulfment pattern to retest the February lows. Again, we'll pay attention particularly how the market respects these price levels, and this market has possibilities of filling in these gaps down below or consolidating and retesting the highs. The pound Aussie, similar to the pound New Zealand, we see where the market has had 3 pushes back up into a high for the year. And again, we'll be looking to see how this market handles the 97.50 area, if it layers on top, or if we see that market possibly peak out and come underneath to retest February's lows. The pound yen, very similar for our up template that we talked about, 3 levels of rise, peak formation, sideways consolidation with an engulfment, and a capitulation for a straightaway. Now again, we have room possibly down to this 132.50 level where the market may accelerate into a capitulation, or we may see it retest underneath of the lows of January, February before possibly rolling over or pulling back into that range. The pound again very similar, 3 levels of rise into a peak formation, dropping down, retesting the traders who shorted that market, consolidating and dropping down. And again, we've got space down below. What's important about these daily charts is you'll notice if you go back and take a look that the beginnings and ends of the month are when these markets tend to either retest highs or lows or break out of consolidations for continuations of moves. So again, the underlying media hype around coronavirus causing the markets to crash, is this purely media manipulation, blaming something for what was already in place, and just an opportunity for institutional selling to accelerate these moves, and again trapping the retail investor, trader, whatever you want to call them, into longer sustained highs where they can now capitulate and sell off aggressively, trapping all of this money in up high. We'll see how this market plays out. Will it return to overall lows, or will it consolidate somewhere in the middle? But again, for our analysis this week, these quarterly levels could be important for us on our intraday trading of the British pound crosses. But again, we see 3 levels of rise and peaks forming in most of these pairs, the pound New Zealand, pound Aussie, up at highs for the year. Again, we're going to have some great opportunities, traders. Stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.